Alrighty, so we are here for day 2 of our week of live streaming here on the Data Dash channel. As with all videos, and I forgot to do it in the last one, I've got to do the traditional snap. So what's going on, everyone? My name is Nicholas Merton here at Data Dash, and in today's video on March 17th of 2020, we are going to be spending some time to not only take a look through cryptocurrency markets, as we've seen Bitcoin rebound a whopping over 40% from its lows. I think the actual number is around 42% from its lows. And the question here is whether or not we've actually seen the final bottom for cryptocurrency markets. It's definitely been shaky over the last few hours. The volatility has been reducing quite dramatically from about a week ago, but at the same time, it is still much higher than we're usually used to. Outside of that as well, we're also going to be talking about traditional markets, as futures are relatively neutral after one of the biggest sell days we've ever had in S&P 500 history and in Dow Jones history. We are going to have to ask ourselves the question of whether or not this volatility is over and how significant of a position are we in traditional equity markets. So we've got a lot of different things to discuss, and we'll also be spending some time going through our sponsor Clio later in the video to talk about some cryptocurrency strategies. So I'm going to go ahead here. It looks like we're coming through clear on the live stream. We got over 219 people right now. Nice to have you guys here. Thank you for joining. I appreciate it and appreciate you making the time during your probably your morning and stuff to join us on the stream. I want to know in the chat, guys, real quick before we dive into the analysis, who here is in quarantine right now and who here is still out at work at the moment? Who's working remote? Who's working in the office? I want to know in the chat, and I'll hop in here a little earlier than I usually would, and I just will see what people are saying. Anyways, while we're waiting for that, taking a look across the board on cryptocurrency markets, most cryptocurrencies coming into a positive rebound, the majority of which are not only in the green, but in double-digit territory, which is exactly what I like to see here. A good, solid, needed rebound here for a lot of altcoins. And then also some of our big plays here, for example, like Kyber Network and Chainlink, up nearly almost 20%. So this is really good to see here. So going on here, yeah, there's a video I wanted to play for you guys real quick. Hopefully you guys can hear the audio, but I think this summarized the last week pretty well, and I thought everyone might need this. So let me check real quick, make sure my webcam. Okay, it's not really in the way. Okay, so we'll play it real quick. I saw that on Twitter because I remember the original commercial. It's like a commercial for, I think, one of the big like bean brands or something. Someone took it and basically put labels over the different astronauts and the monster being coronavirus. And crypto was kind of the last, I guess, kind of market that really started to get hit out of all of them. So I hope you all enjoyed that, and hopefully that puts you in a little bit more of a positive mood. Anyways. Let's see here. I want to go ahead and read some of your guys' comments. So, a good amount of you are in lockdown in the moment. Oh, someone's built. Oh, Justin's building a hospital. That's interesting. Hopefully you guys can get it built up during these times and stuff. I know people need it. Dave asked for the link. I'll go ahead and I actually have the file downloaded, sadly, but I will go ahead and try to share the tweet with you guys a little bit later on. It was really funny. I was trying to search for it all morning. All right. So anyways, getting down to business, guys. I've pushed it off long enough. Want to go ahead here and talk a little bit about the current state of Bitcoin here. Now, again, taking it from the lows here, we've had about a 42% rebound in price, which is good to see. We never really hung down below in the $3,800 range for very long. It was very shortly lived. And what's nice is that we set a significant higher low here on the hourly chart. You can see here in this case we're back to around the relative neutral territory we bounced around in the sense of price. So this is what I'm looking for here. I want to see us again continue to set higher lows, showcasing that the buy side pressure is kicking in, and we're eventually going to start getting past this general resistance mark around here on 6,000. You can see we had resistance slightly above 6,000 right here as well, right below it, and then right here about down below as well around the upper $5,900 range. So this is showcasing us the big even we're watching for here. To continue higher is going to be 6,000. Now, again, outside of just Bitcoin here, right? I want to see those higher lows, right? Again, you could draw a trend line. I don't really think this is necessary. I don't think it per se has to really line up exactly. I just want to see higher lows, and so long as we're getting that and pressuring higher and higher towards 6,000, I'm going to be confident that we've got a much longer runway for a rebound here to make up for a lot of these losses over the past week, okay? So that's my key point of what I'm watching for here. I'm not trading this market, guys. I'm not doing anything eccentric. But wanted to just, again, drill that point there of higher lows. It's very simple things we look for. Kyber Network rebounding a lot here. Really good to see this. I do want to mention as well, guys, I just, for one of the positions that I did take a partial share, and I took a little bit of partial share on Kyber Network. Nothing too significant to where I wanted to make a big scene out of it or anything like that, but did take a little bit and convert it into Bitcoin, just as this market has been a little bit more less risky. But I'm still holding Kyber Network. I still have a good position. I think I'm still keeping about half of it in Kyber Network because for me personally, I felt I needed to take some profits from the range that I bought it in around here, around the, I think, 2,500 to 3,000 Satoshi range. It had gone up quite a bit, but I'm going to hold the rest of it because I really think if you take a look on the longer term time frame, sorry, not the monthly, I want to do the weekly. Take a look at the weekly here. I'm even turn off the drawings, right? I'm going to turn off the RSI as well. Let me go and get that off. So we can see here in this case, right, Kyber Network likely has a long way to go because this is one of the few projects that came out at a pretty high valuation for not having much delivered at the time, but ended up actually being one of the top delivering projects in the DeFi space. And, you know, we talked about it since as far back as I think it was September, October, and I thought it was originally November, but I checked it back recently. We covered Kyber Network during its, I think it was during its ICO and stuff before they'd even raised. And I was such a huge fan of Kyber Network because the idea made complete sense to me. And the idea of decentralized exchanges was a real use case of actual networks like Ethereum. So anyways, just wanted to kind of press that. And anyways, just want to make sure you guys know and stuff, but we're going to dive into some questions in just a bit, but I'm going to go ahead here and run through some of the key things we have to talk about in the sense of the market. Now, what I like to see as well is Ether, in this case, still setting in a higher low here compared to what we were back here. That's something I want to see here. I do not want to see this roll back over. And sadly, I really don't like the daily chart here, right? This looks like it's rolling over compared to Bitcoin, which is holding up a little bit better. But all in all, right, it's going to be a matter of whether or not really Bitcoin picks up as to whether or not these altcoins are going to go any lower. And I think, honestly, with more than a 50% sell-off here from 280 down here to 100 and at the exact low around $89, you know, I think this is going to be a buy zone for a lot of people for Ethereum. But we'll have to see here again. It really matters, guys, what happens here over the next week. If we don't start getting a steady rebound here and buyers start to outweigh all of the sell side pressure and the liquidations we're getting through margin traders and also a lot of people who have taken out crypto-backed loans and are using their crypto as collateral, that's a very important thing to keep in mind here. Whether you're talking about Maker or you're talking about the lending pools out there, this is a very severe problem if ETH keeps pressing down lower. It's going to be a domino effect in this case. So, anyways, want to go ahead here, guys, talk a little bit about equity markets now that we've dived in through crypto, and then we'll start diving into some questions from you guys. Again, not much has changed here in the sense of equity markets. I mean, you have some indices right now that are trading futures like Russia and Switzerland and Germany and China that are trading down right now currently around 2 to 3%, whereas some of the other indices across the world are doing really well. So you have here, for example, I think this is Poland here. You have Poland, the ASX 200, which is giving us a good exposure to Australia, and then also the Topix Japanese index. These ones are starting to tick up really big, but U.S. indices are still only about a 1% move, and right now this is really not much, right? You know, 1% move, especially in futures markets, can change on a dime, especially in these kind of volatile environments. And I want to talk about that, guys. There's something that a lot of people don't look at, and that's the VIX in this case. The VIX is a very important index to showcase uncertainty in markets. And in this case, we're seeing a very, very high level on the VIX, higher than what we've seen back here since 2008, right? We have not seen any time since the last recession, the VIX breaking out this high. And it's pretty much at one of the highest levels. Again, we've had it a little bit higher here as we entered into the kind of bloodbath, the end part of the recession. Really, you know, we haven't had the VIX close on the weekly up at this range in history. Pretty wild stuff, guys. I mean, this is, again, just highlighting the significance, how we've been selling off even faster than 1929, and we've been selling off even faster than 1987. we just had the second biggest down day in the Dow Jones and the S&P 500 that we've had in history. The worst was on 1987. But it's incredible stuff, guys. And the interesting thing, again, I have to say, there's a lot of things we messed up on, guys. You know, being not taking in, for example, I'm going to go ahead and say something humbling here. I made a big mistake being bullish on gold and silver and a lot of other kind of different assets like cryptocurrencies and not anticipating that cash dry period where everyone's going to be liquidating or closing positions. That's something I got very wrong. And I think, then again, I think people as well, even like myself who are bearish in equities, wouldn't have expected the sell-off to come this quick. So I would say that some of it can be mitigated by the fact that COVID-19 or Corona could not have been predicted by anyone. Right? I mean, we could have seen it maybe a month or two out than others, and we were definitely following it since it started to develop in late January. But all in all, guys, let's be real. There has to be a sense of understanding that this was unprecedented, that this is not expected whatsoever. But one thing we did do in the newsletter is that we were calling for a breakout on the VIX because we were building a wedge here on the VIX on a multi-year basis. So this, to me, is something I'm a little bit proud of. And it came earlier than I expected. I thought it was going to come sometime during April or May. So very interesting stuff. Now, to talk about kind of the market conditions here, guys, you know, COVID is still continuing to grow here. What's nice is that the U.S. and a variety of other countries are finally taking some precautions, if not the federal government. People on the local level, some people are choosing to self-quarantine, and then also a lot of companies are making proper moves. You know, for example, where I was going the other day, I actually had to go out for something yesterday, but I stayed mainly in my car for the most part. And I was noticing as I was driving around, what would usually be rush hour traffic around 5 or 6 was like standard normal traffic, right? So there was not cars stacked up because a lot of the employers in our area that really employ a bulk of people in the area and will usually clog up the highways and stuff, they actually decided to tell people to self-quarantine, to stay home. So it's really good to see. And I think if we take enough of these measures, we can start to really stagnate the growth here as we're doing right now. But I still think we're at a point where we're going to start getting cases like Italy. And that's the real big issue here, I think, in the United States, especially with a lot of people who are immunocompromised, a large retiring population. That's what concerns me. But anyways, again, cases are pretty much on par for what we're expecting them to be at. And it looks like we are taking some better precautions. People are becoming more aware of it. All in all, though, I want to take a look at markets here and talk about the kind of nasty condition we're in right now. So if we take a look here at traditional equities, specifically in the S&P 500, and taking a measurement of market liquidity, basically the available cash here that's flowing, there's an interesting lack of liquidity we're seeing here on IsabelNet that's showcasing why we're seeing such a stark sell-off. Since back here in 2018, we have not had a good bulk of liquidity coming in and out of markets. Mainly, stocks have been driven by stock buybacks. And because of this lack of real demand for actual cash on the books, in this case, when we get people selling off and those stock buybacks dry up, you get the most dramatic multi-month sell-off that we've seen in history for the S&P 500 and the Dow Jones, worse than 1929 in the sense of the pace of the sell-off. And again, this is not rocket science, it's because there's no liquidity. It's the exact same issue that's actually been happening in cryptocurrency markets. While everyone's trading on derivatives platforms and trading on margin, and they're trading on the spot price, which has no liquidity in the spot market, well, then you get these dramatic sell-offs. You get a lot of liquidations, and it's a compounding effect. Anyways, thought this would be very interesting to share with you guys. Just came out the other day. Another interesting and relative chart as well is showcasing the pace of the sell-off here. The number of days it takes us from market peak to close down 20% or more from the peak. We set the fastest record on history. Again, for those who don't believe that we're doing it worse than 1929, where we had the Great Depression, right here. It took over, I think it was about 30, if I'm guesstimating from this, around 32 days. If this is 20 here, something along those lines, maybe even 40 days, who knows. But nearly double in 1929 what it took to get here in 2020. Still not a little bit scared yet. I mean, this is pretty severe stuff, guys. This is big in the world of history and finance. Sorry, I kind of worded that weird. This is really one of the most monstrous moments in the sense of price action when it comes to financial history in the United States. And it's expected after building one of the largest economic bubbles in history, with the longest economic expansions in U.S. history. Another thing as well, take a look at the rates and volatility here, not just for the VIX, for the S&P 500. And to bear in mind, for those of you who may not know, it's completely fine. To explain what the VIX is, the volatility index measures the range of price and options for the S&P 500 within a given window of time. So if the spread for these options are starting to, the price starts to spread quite extensively over a short period of time for options in a certain given window of time, then the VIX is going to spike. And that can mean to the downside or to the upside, just means that there's a lot of uncertainty in price, right? And then outside of that as well, 10-year Treasury note, the yield here, the volatility for that, there's a VIX specifically for the 10-year Treasury note yield. Take a look at this. Up larger than the normal VIX here. And this is exactly what we saw back here in 2008. So again, we're clearly stepping into a recession, guys. I know some people say you need 2 quarters of negative GDP in the real world economy. We're already on pace for that, trust me. If you look at the actual economic numbers in China, if you look at what's going on at a lot of local businesses and companies here in the United States and in the EU, we've already been setting up for a recession, practically speaking, for the last couple of months. This black swan is going to knock us into some of the worst GDP levels we've seen in the past few decades. I can guarantee it. Outside of that as well, weekly bond fund flows here at their worst level in the last decade. Interestingly enough, as bonds have again been kind of the optimal choice here, we've finally started to see a relatively decent outflow in bonds. So if we take a look at TLT, for example, right, huge sell-off here from the peak as we kind of reached peak performance here in TLT. You can see the volume here, for example, on the ETF. Huge outflow here. Then again, still one of the better performing areas of the financial sector. Only thing that's generally up here since the start of the year. So give it that. But again, we'll see if whether or not people come in to buy the dip here. If we take a look at yields here, I'm going to go ahead and take a look at the U.S. 2-year yields for government treasuries. Rolling back down here. Not looking good, guys. This is exactly what we don't want to see, because the more and more we see this going down, it's an early precursor to the idea that the Fed's going negative on rates. And along with that as well, with negative yielding bonds or negative yielding treasuries, it's going to be unprecedented. It's going to be a huge effect on the global economy. Now, the last thing I want to talk about here in the sense of crypto markets is really kind of preparing for the next 2 months when we have the halving event. All right, we're coming into the later part here in March, guys. You know, we're entering into the end period of this month, and then we've got basically 2 months, actually really from now, I would say, because it's going to be mid-month in May, from my understanding, where we're going to get the halving event. So what I want to see here is Bitcoin start to rallying up a little bit into the stock to flow, the halving event in this case. And of course, it's fine if we have a delayed response like we had last time. I think that's going to start happening more and more in the future with these cycles. But again, we're going to have to see here in the next couple of months going into the summer if we start to really get some upticking in price. And if we don't, that could be a really concerning sign that even though we're cutting the supply side of Bitcoin, right, that the demand might not be there to keep up. So anyways, for those of you who are still on the long-term view like myself as well, and before we dive into questions, I want to spend some time to take a look at our sponsor Clio and talk about a strategy that actually could prepare you for averaging into Bitcoin in this case, but at the same time being able to swing the market and being able to hopefully stack sats in this case, or build your position while you're going through that kind of hodling process, right? Something that you don't have to worry about trading, but at the same time might be able to increase your yield. Well, I actually built a strategy here on Clio, and for those of you who may not know, Clio is an automated strategy builder where you can actually put things in plain English. You don't need to know a lick of computer science or programming, and you can actually go through and build strategies. So I built one here called the BTC Run to Save strategy. And this strategy basically allows you in this case to enter in and out and basically get out of those fearful points in Bitcoin's price history. So for example, I'll take a look back here on the chart here. The strategy I built here took a closing trade right here. If we go here on the hourly here, right? It got us out basically right before the periodic sell-off here that really led prices down. So again, we want to build a strategy that can possibly get us out at those moments, almost acting like a closed condition in this case to get us out during bad times. So we can go ahead here. We'll go ahead and click create new version just to see what the rules are here. So we basically built a combination strategy where there's 2 different open conditions, one of which could trigger a position where we're basically going to use all of our USDT or our dollars in this case, and we're going to be holding any of these positions until 100,000 unless one of our closed conditions gets hit. So for example, on this one, first one asks when price is above 3,000 and price is above the EMA, basically we see confidence of price being above the exponential moving average, then in this case we're going to enter in a long position. And basically if it were to close we're going to basically close the position if Bitcoin market cap is down by 5% in the last day, and then also we're going towards the lower end of the VWAP. Now, for those of you who don't know, the VWAP is a very professional indicator tool that a lot of professional traders use, more in traditional markets, but you can use it in crypto. And I really like it, use it in this case. And then one of the things as well, I was talking over with Kevin, he recommended, he likes to use the 20 to 2 in this case, basically the 20 period and also the 2 on the standard deviation. And this acts a lot like a Bollinger Band for those of you who may not know or may have not used the tool before. Along with that as well, we've also got a second condition when price is above the EMA and the RSI is crossing up 30 in this case, right? We're going above 30 from the lows. This is a sign for me that we've got a bottom in this case and that I'd want to enter in after closing my position. And then again, the same kind of close conditions. And we can see here that the results are actually quite solid here, right? If we take a look here, total return of 429% over the backtesting period, actually a higher return than what you would have gotten over the last couple of years and stuff, rather than just holding. So an annualized return of 86%, not bad. Again, really interesting strategy. You can see the risk factor is 9 here because we are doing a decent amount of trading here. And again, here's the rules if you guys would like to digest them. You can plug it in yourself on Clio and get started with an account today. It's free to test it out. And then if you want to access some of the extra additional features, you guys can go on there as well. But these are the statistics, the actual winning and losing trades here for my different rules as well, which is really cool. You can break that individually. But again, really recommend you guys go check out Clio. Check out the link down below. I'll leave one actually real quick in the chat here. And I'll put one, if you guys just go to Clio.1, you guys would be willing to go ahead and actually try it out and stuff. But I'll actually go ahead and if you go to my most recent video, you guys can actually check the link on there. I'll have it in there after I do the live stream and stuff, guys. I do apologize. But definitely go over to Clio.1 to test it out. All right, so let's go ahead here, guys. I want to start answering some questions. We got over 838 of you in the stream. I appreciate you all making it. So this is the question segment where we're pretty much done talking about the kind of major daily update stuff, but let's go ahead and we'll dive into some questions here. Talkeeper said, "Hey Nick, thank you for your videos. You really helped me to understand the crypto markets in the past years. It's good to see you're so level-headed in these tough times. Stay safe." Tal, thank you very much, man. It's as well to you. Stay safe and hope you're getting through everything well. I know it's a difficult time for a lot of people in markets generally, but guys, I always think about it. You know, right? Bitcoin's still sitting at 5,200. I remember a year ago. It really is. It's actually probably about a year ago from now. When it was in 2019, and I was visiting Europe. I was doing some a tour for the open source project I was working on, Project Genesis, and I remember Bitcoin was like at its lows, down around 37, 3,800. To me, I was just as excited about the space as I am now, right? And during these times when market prices are actually quite down low, what's nice is it kind of filters out a really good sense of quality people in the space, right? Like I know a lot of you here are going to be in this industry for the next 5-10 years. You're either going to be invested or you're going to be building something or you're going to be sharing and, you know, bringing new people on into the space. And that's the kind of crowd I like to be around. It just makes it a lot easier to find those people when there's not crazy price action, when people aren't FOMOing and fudding and just trying to trade and speculate, you know? Metabom, thank you very much, man. I appreciate it. Let's see here. Thank you, Chris. You guys are very nice. I appreciate all the kind comments. Let's see here. Cosmic Elf brought up a good question here, so I'm going to move my mic so I can read your guys' questions a little bit better. Cosmic Elf had asked, Data Dash, that's right, scrolled up there. Why do you think silver has been so stagnant up until this crash? Last time in 2008, it was making gains before the crash. Think it will recover to $40 again? Yeah, Cosmic Elf, I do believe it's going to make it up to 40 again. It's a matter of when gold really starts hitting like parabolic performance, and then the gold to silver ratio comes into play. Sometimes markets move different ways. In this market right now, there is such a demand for cash, Cosmic Elf, that no matter what market you're in, people are covering and liquidating positions. People want cash right now. And even commodities like gold and silver, as well as cryptocurrencies that are going to serve as hedges over the next year or so, right now are not serving as hedges, right? It's at the end of the day, they all share that similarity where they're trading against a dollar pair, right? And what do people want right now? They want dollars. So that's the thing. When there's a liquid market and people are holding assets and then they all have a demand for dollars, You know, in the short term, it's going to sell off. And now, into your question about why it's been stagnant over the last, you know, like really the last like 5 or 6 years, ever since it really hit its bottom range. You know, man, I really don't know. Why hasn't it kept up with gold? I don't know. I'm really wondering if it has to do with a lot of the supply dynamics of silver. I haven't checked the actual like production of silver this year, actually. To be fair, I've actually got to go through and look at it. But I'll tell you the biggest reason is probably that compared to gold, which has a very consecutive inflation rate of 1 to 2% every year due to like the production rate that's been very common for the last 200 years. It might be that's talking about is the difference on spot rate for physical versus paper notes like SLV and GLD. What people are paying for the notes is a lot different than what people are paying for the physical stuff. The physical producers can barely keep up. That's the interesting thing. So anyways, just thought I'd tell you guys to look into that. Rich Frosty said, "Hey Nick, new to the channel, so glad I found you. Can you tell me the software you're using for viewing your charts?" Yes, Rich. It's a free software. It's called TradingView. I have I think the pro version for my account, but TradingView is a really good charting software. They're not a partner on the channel or anything like that, but I will say that they're the best in the industry. Plain and simple. I have nothing to complain about when it comes to TradingView. I mean, outside of very small, minute things. It's a great charting application. You can get access to pretty much any market you want. You can set up a watch list here. I've got multiple different watch lists because I have the pro version. But man, if you're investing or trading a lot of money, then it might be worth to get the pro version. But at the end of the day, the free version itself works great. And again, it's free for everyone to sign up. So would recommend you check it out, Rich. It's a really great tool if you're going to start trading or investing. Let's see here. Paul asked a really good question. What do you predict will happen if U.S. rates go negative? Paul, I got to be fair. I don't know what's going to happen. Because, see, I'm always one of those people. I think it's a great question to ask because, you know, if I'm blowing it up to be this big thing, you know, of course, we should have some kind of understanding of what's going to happen. And quite frankly, it's one of the biggest, like, unknowns. It's the biggest question mark that's been on my mind. There's a few different outcomes that could come out of it, right? You basically get the end of the bond market because what happens is the negative yield that you get from having to hold those treasuries versus the price appreciation of it eventually starts to be it starts to outweigh the price appreciation of the spot bond, meaning like the bond has an actual value on the market like a stock or a cryptocurrency, and that gain you're getting from the bond going up, right, from people buying it, right, starts to get weighed out by the negative yield that you're having to face. And when that happens, you're going to have a huge correction in bond markets, and the bond spot price is likely going to be shooting down in this case, big time. And yields might start to finally correct, right? But it's just going to be a huge liquidation, or not so much liquidation per se, a huge drop in valuation of people's portfolios, and it's going to send shockwaves throughout credit markets. That's my general kind of thesis, but I think there's people who are much more qualified to talk about it than me, because it really is. It's a guessing game at this point. We've seen negative yielding bonds work in Japan and Europe for a while. It may take a while before anything severe happens. Mandira said, "Appreciate all your videos, Nick. Thank you. Don't have time to hang around now. Just wanted to say thank you. Good day to you all. Love from Denmark." Thank you, Mandira. Appreciate it. All right, so the market's just opened. It's 9:34. Keep going, or if we'll actually start ticking up here. You want to see this hold at this range here. You do not want to see it go any lower. So you just want to see it basically kind of start to cup around here, get back up to the highs. That's usually a kind of reversal pattern, usually for these gap ups. But let's see here. Bronc Patriot, this is a good question. Hey, Nick, what are your opinions on the media? Will they even care about the Bitcoin halving? They'll care about it, Bronco, if the price starts going up. Plain and simple. If we don't get enough buyers pushing up the price after the halving event, no one's going to be interested. It's honestly, it's the reality, guys. There's nothing wrong with that. I think that's, you know, honestly, for us in this space, we love Bitcoin for what it is. And if Bitcoin can deliver on clear utilities of censorship resistance and sending and receiving payments more efficiently and being outside of the banking system during a time where there's a lot of economic fear and people might be worried about bail-ins where banks can take your deposits, that's actually happened in a lot of countries. And it'll probably happen in a lot more this time around. But if it can deliver on those things, that's great. And if people at the end of the day care about price, yeah, who doesn't, right? Price is what we're looking at right now when we're taking a look at all these different things. I think for us to sit here and lie about the fact that we care about price to a degree it'd be a bit arrogant in a sense, right? So I think, sorry, I'm kind of going on a tangent, Bronco, but just to your point, will the media care? Yes, they'll care about it if it's about price at the end of the day. If price is going up wildly, that's why media have talked about it in the past, and it's why a lot of people get interested in it, right? The media is only going to talk about what people care about, and people don't really care about the technology of Bitcoin. But I don't blame them, because the internet is complex. It would be like asking everyone to know about TCP, to know about, for example, a voice over internet protocol, all these things we use, right? But no one wants to know about the back end part. We just want to know, does it work? That's going to be the exact same thing about Bitcoin. Is Bitcoin yielding me a return? Right? That's what people care about. So hopefully that answers your question, Bronco. Good question. Kalai said, "Hey Nick, thanks for being my first unofficial investment educator." Yes, not official financial advice, but definitely can be an unofficial educator. Hope you're doing well. Thank you very much, Kalai. My question is, which industries or companies do you see having the highest potentials for us to invest in? Again, Kalai, I can't tell you what to exactly invest in, but first off, cryptocurrencies I think are going to yield any more than any other industry or wing of the financial world over the next decade. Plain and simple, it's a new emerging asset class. The point I always bring up in this manner is that you've got cryptocurrencies, which right now we can actually get the actual statistic. Right now is valued at around $150 billion, give or take. And then you've got traditional equity markets, which have been selling off big time, but they're still double-digit, multi-trillion-dollar markets. I think U.S. equities are valued around 50 trillion around the peak, 50 to 60 trillion. So you have to ask yourself, what market is most likely to double? Cryptocurrencies at around 150 billion that only needs to go to 300 billion in order to double, or equity markets that were sitting at $50 trillion and need to go to 100 trillion to double their valuation. I would take it with the option of cryptocurrencies, because it's a much smaller market, it's much easier to double, and it's a growing asset class that's been setting higher lows every year, and in many cases higher highs every year. So that's the general thesis of what we want to look for in a market. Anyways, hopefully that answers your question, Clay. And then also in the sense of other things that I'd be interested in the sense of stocks, I'm interested in a few different markets. I've got the cannabis sector I've been keeping an eye on here. Once you get a lot of the crap filtered out, I'm definitely going to be looking for some winners at these kind of cheap prices. And along with that as well, energy stocks, I'm a big fan of looking towards uranium in the sense, uranium miners in the sense of expansion of nuclear energy, and then also for solar energy as well. The solar sector right now, for example, if you take a look at the TAN ETF, this is a broad index ETF for the solar sector, down nearly 50% from just back here towards the end of February. So I've been waiting for this moment for a very long time. I'm going to be waiting a little bit more because I don't think we're completely there yet. But I will say it is nice to see solar stocks this cheap here and in such a short period of time. What I'm looking for, generally speaking, is that hopefully, I've already got my line there. I just have my drawings off. For this to generally come down here to $20 because it'll be more than a 50% pullback. But along with that as well, it'll basically fall in line with the line of support here. For a much longer term breakout, I think we're setting up a huge ascending triangle here for the solar industry. And I know a lot of key players I would hold personally. I like CSIQ. I like Sunrun. A lot of these plays that have been a lot of the fundamental solid plays when it comes to their financials and good solid growth over the last few years. Alrighty. Outside and First Solars as well. FSLR is a pretty good one too. But that's just me personally. I can't give you guys recommendations directly. Let's see here. Jay Martin, good morning to you. Thank you for wishing everyone a good morning. Oh, we got a donation from Arc Owner. Sorry, guys, I don't have my headphones in, so I didn't hear the little thing go off. Hi, Nick. What do you think will happen to BTC's price if miners are getting paid only 6.25 BTC after May, and the price remains or is even goes lower than now? What is the worst and best case scenario? So, Arc Owner, that's a great question. Thank you for the donation. So I want to go ahead and try to answer this as best as I can. So you asked about the worst and best case scenario. The best case scenario is basically that no matter what, even in the best case scenario, hash rate's going to drop big time over these next couple of months. It's already doing that. I mean, you guys can look it up right now. It's public knowledge what the Bitcoin hash rate is. You can see very much that it is going to drop. It's already started this process because even the Chinese miners, which make up the majority of the hash rate, cannot sustain themselves at these price levels until we get back above around 65, 6,600 per Bitcoin with the current difficulty that's going on right now. So people are going to be cutting it off no matter what. In the best case scenario, it doesn't matter. Even if we drop the hash rate in half for Bitcoin, it's not going to be the end of the world. Bitcoin's network is still one of the most secure decentralized networks in the world, and distributed aggregated consensus mechanisms in the world, right? And what will happen is the difficulty goes down. Miners can produce it, much more miners can produce at a profit, and then we go back to a situation where Bitcoin's price is likely going up, right? That's the scenario that would be good. Prices are going up, we cut back in hash rate, miners eventually come back, and as time progresses and as prices get larger, right? Now, the worst case scenario would be a mass exodus of miners where it starts to compromise the network security of Bitcoin. And along with that as well, prices continue to decline, cutting off even more miners, to where it creates a cyclical process where you have absolute fear and pandemonium, and it makes it where practically for 2 weeks, the difficulty for mining is so bad where we cut off a mass amount of network security. It'd be a domino effect, basically, because Bitcoin's network takes 2 weeks to adjust difficulty. So if difficulty is really high right now, and then the price keeps declining, and miners are forced to shut off, and then as we keep going down, miners are shutting off, and the price keeps going down and down and down and down and down, and there's no buyers coming in, then it starts making it more and more unlikely that miners can sustain at a loss, and the network security drops to something that would actually be a threat for Bitcoin. That's the worst case scenario from what I can see. But again, there might be some other scenarios that I'm not thinking about. Rotho, bro, keep it up. I like your videos. Thank you, Rotho. I appreciate it. I appreciate you all joining me in here, guys. And glad to see we almost have almost 900 people between Twitch and YouTube. So Unique asked a good question. What's your opinion on DeFi after ETH's price crashed? It seems like they're facing some problems. Yeah, Unique, there's actually the biggest problem right now is what's going on in MakerDAO and a lot of the bigger projects that stored a lot of the ETH for the DeFi ecosystem. So I think that the lending pools like Celsius Network and Compound are doing okay. They could be facing some liquidations, but there's a big issue right now with MakerDAO that a friend brought up the other day, and I meant to show you guys some of the articles in relation to it. I'm thinking about doing a little bit further discussion on it in the next few days. But MakerDAO, for those of you who don't know, is one of the largest decentralized autonomous organizations. It's basically a decentralized government or a central bank in a sense in the crypto space that locks up. They have a product called DAI. It's a stable coin that's backed by crypto rather than dollars in a vault somewhere that a bank owns. So basically, you lock up your Ethereum into a smart contract, and it generates the stable coin. Now, you still technically, in a sense, own that ETH in the smart contract. You just have to reclaim the DAI that you took out with the interest and pay it back in time. And then in that case, you can get your ETH back. But the big issue here with MakerDAO is that it depends on being able to stabilize the DAI stablecoin at a specific rate. Because in this case, if, for example, your ETH goes down enough in value, you need to keep on collateralizing your your DAI loan in this case that you're borrowing with more ETH, or you have what's known as a liquidation event. You basically have a margin call. It's just like trading on margin in traditional equities or in cryptocurrency markets. But there's something else that's concerning. The other day, DAI's price went to like $1.09, again, breaking off of its stablecoin peg quite dramatically as ETH was selling off. And this is almost a double whammy effect on causing margin calls and causing a liquidation event, because if you have ETH's price going down, you already need to add more ETH to your contract in this case, and to the contract in order to cover your CDP, your collateralized debt, your CDP, your collateralized debt position. But along with that as well, if DAI's price is going up, this makes the obligation even worse because the value of DAI is increasing, meaning that what you've borrowed is worth more now, meaning you need to have even more collateral. And it's a spiraling effect. And then you have to take the third factor in, which is that the network is getting clogged and you can't even process the transaction to put ETH into the contract for DAI to cover your CDP. So this was what basically happened the other day. And if we get another sell-off like that on Ethereum, you're going to see a mass depletion on Ethereum's price because it's going to lead towards a mass liquidation of basically 2% of ETH supply, which is locked up in MakerDAO. That's my biggest concern. So I think they need to have more safety mechanisms, or we need to see a big move in ETH's price to the upside where things are going to get real bad, in my opinion. And I love MakerDAO, right? I've been a supporter of the project for a while. I've been supporter of a lot of these DeFi projects from Kyber Network, things of the like, for the last few years. But we got to make changes here. We got to think about these. There are some fundamental flaws here in a lot of these systems. And you can see it if you take a look at Maker's price. I'll just go to your coin market cap, right? We can see Maker, it used to be leading in I think the top 15 or 20. Maker's price has gone down from 600 million in valuation down to 200 million here in just a couple of weeks. Now, most cryptocurrencies are down, but you can just see here in Bitcoin comparison as well, Maker's not looking good in this case. So it's taking a second to load. Yeah, basically dropping, not in half entirely, but well, if you take it back a bit further, yeah. But again, pretty severe drop here across the board for one of the biggest plays in DeFi. So hopefully we make some swift moves here. Let's see here. Bronco, I'm glad to hear you're here for the long term, man. We need more of that. How do we get a donation? Oh, Picnic says the stream is coming through even clearer on Twitch. That's good to hear. Chris, thank you very much for the donation, man. Will the stock the stock crashes ripple out to the housing market within the next few weeks? Chris, this is actually a very interesting question. I'm glad you brought this up. So, on the surface, you would say yes, right? And I've been saying the exact same thing. I'm really curious if this is going to start hindering people's purchases of homes. Now, if COVID-19 keeps spreading and we keep delaying a dramatic response to COVID-19, yes, I think it will hinder property markets. But the interesting thing is that the Fed has been lowering interest rates in this case down to 0%. And it looks like it might be going negative. So if you start entering an environment where you basically have to pay little to nothing to take out a mortgage rates are at their lowest level, I think in history or like in a long period of time. It's around 2% right now. So what it's basically saying is that right now, all you have to pay is 2% on top of the principal loan on a 30-year mortgage. So basically over 30 years, you need to pay down the price of the home with 2% added to it. I mean, I would take that. If I found a good property right now that wasn't too overvalued, I'd probably take that. And there's a lot of properties in the U.S. that aren't too overvalued right now. A lot of homes that are brand new, right, in areas that aren't the big cities that you can get a mortgage for, 30-year mortgage, 2%, and you can buy a nice brand new home that gives you all the space you want and all the amenities you want. It's brand spanking new, well built, and yeah, only pay 2% on top of it. Not a bad deal if you can get it. And that's what people are getting right now. That's the average rate for a 30-year mortgage is 2%. And if yields, the interest rate will go down even further if the Fed funds rate keeps going lower. Because banks are very competitive when it comes to mortgage markets. There's not much of a yield for banks in that case when it comes to mortgages. Right? They're making that 1 or 2% off of the Fed funds rate. It's down at 0%. If they're charging 2%, their margins are razor thin, but it's on a multi-trillion-dollar lending market, so they're still making good money. All right. But anyways, yeah, to your question, I mean, honestly, I'm going to still say it could go both ways, but for me personally, I would say that it's still likely markets are going to go down, that the Fed is trying to supplement buyer's demand in this case by lowering the rate or basically the yield on, or the rate on mortgage rates due to lowering the Fed funds rate. But at the end of the day, they're not going to be able to keep up with the just absolute fear where people are hogging money. They're not looking to spend on things they don't need, right? Bitcoin to the Moon said, smash the like, guys. Thank you, Bitcoin to the Moon. I agree, guys. If you guys can, I usually try not to ask it too much, but Vincent said, I saw this recession, but not the virus coming for a year or so. So he paid off his house last year. That's awesome, man. Good to hear. Let's see here. Yeah, wow. So TS brought up the point. 20% interest on mortgages in 1979. Can you guys believe it? 10 times more interest on a mortgage. Wow. Rasta brings up a good point. He says, you actually can't buy physical silver today. Try. I bet the guy at the store won't sell it to you for less than $20 an ounce. See, that's the difference, guys. What you had here over the last few years, and this is the reason why we say traders, it's all right to use like paper products, but for actual holders, like long-term people who are hedging like against a collapse of some sort, the paper contracts like SLV and GLD for gold, they've gotten printed into oblivion. It's basically fractional reserves in a sense, or more specifically rehypothecation, where people think they own an asset, but they really don't. It's a paper product. And when there's enough of a break-off like this, where people need cash, they realize, well, wait a minute, this isn't the physical settled product that I can take. This isn't a futures contract. In this case, you start getting this. This is not the real price of silver, guys. The real price of silver, if you want physical right now, it's holding back up around this range, if not higher. So, very interesting stuff. Wasted Talent, thank you very much for the donation. I said, with 10K in cash reserves, what's the smart play in regard to investing at least half crypto and the rest stocks? Wasted Talent, I can't tell you what to put your money in, man. I appreciate the donation and the question and your interest in my opinion on it. I can tell you where I'm positioned right now. In the sense of crypto, I'm mainly diluted like between different altcoin positions. So I've been in Kyber Network. I've been holding Basic Attention Token. I've been holding as well Chainlink. These are some of my big plays. You can look at my top 10 altcoin video, and that'll give you a good idea of some of my plays for this year. And outside of that as well, in the sense of stocks, I would say to look for plays in emerging sectors that you find interesting. For me, I'm interested in the solar sector over the next coming decade. I'm interested as well in a lot of the big tech plays, right? If you can get some of them at discounts, that's where I'd be very interested. And by big tech plays, I mean more kind of mid-cap plays. We'll do a whole video segment, I think, in the next couple of days or weeks on talking about some of the different stock plays that I'm watching. And then I'd say some of the cannabis plays that actually have solid fundamentals, growing revenue, aren't burning through cash like crazy. That's very far and few, but anyways, those are some of the sectors that I'm looking at. Let's see what's going on in equity markets, guys. I'm going to go ahead and pull that up real quick. So, actually, we'll pull it up here to the SPY. Wow, so the SPY has turned negative, guys. Look at this. We rolled over all the gains we had this morning. Let's see if we get a rebound here. This is the moment where we'd want to see it. If we break down below 239 here on a solid close down here pressing towards 238, you can bet yourself we're going to have a sell-off. Even after the second worst day in the S&P 500 and the Dow Jones. Unbelievable. And this is pretty crazy stuff, guys. Just seems like the momentum is picking up more and more, like this is about to start falling off a cliff. Interesting stuff. All right, let's see here. Fluffy Badger, again, building on that point I was talking about earlier about physical versus paper. Own the physical, guys. I don't own too much, but I do own a little bit of physical gold and silver. And I know that if I want to build in my positions, I'm going to be building it in physical. Paper notes that finally the rehypothecation, the reuse of, like, for example, like for GLD, it's like a 1-to-100 ratio or 1-to-120 paper contracts for every one piece of gold that they actually have. I mean, it's scary stuff, guys. You can't get away with that forever, especially during these times when people want to cash out. Let's see here. Ted Garner asked, are you worried about YouTube kicking off Crypto Dudes? Crypto Zombie hasn't been on for 4 days. So I'm sorry to hear Zombie hasn't been on for a while. I'm not really worried about it. I haven't had any issues here. It looks out, guys, real quick. We have to take a look at the market here. Breaking down to new lows. I mean, this is just crazy stuff, guys. But towards your question, YouTube has actually not been too bad about censoring crypto channels. It's people abusing the flagging mechanism on YouTube. So if YouTube can fix that, then I think we're all good. But I don't think they have anything against crypto content. And they finally removed the COVID coronavirus censorship that would demonetize channels if they talked about it. So I'm happy they did that. Let's see here. Daniel asked, let me see. I misread the name. Kivanik said, "Are you worried about a Ethereum network malfunction?" No, I'm more worried in this case for Ethereum to have a mass liquidation and prices go down to crazy levels, clearing through the order book because of a mass liquidation event on Maker's CDPs, MakerDAO. Let's see here. Ross, I know that they removed the COVID censorship stuff because my videos aren't getting demonetized when I mention COVID-19 or coronavirus, and they had an article that came out that talked about it. So pretty stark rebound here we're getting in the S&P 500, even though we just broke to new lows, but I'm interested to see how this will react. We'll see what happens here. I'm going to answer a few more questions, guys, and I think I'm going to sign off for the day. We should try to keep this to an hour, but we'll do 3 more questions here. Let's see here. Ali, I think it's a good question. Where are my 6-month and 1-year forecasts for BAT and Kyber? And I was speaking in terms of USD. I like that. Basically, in the sense of USD, I can't guess 6 months out from 1 year from now because, quite frankly, I mean, if anything we've learned from the last few weeks is that the market can turn on a dime. But I will say that I do believe they're going to be some of the better performing altcoins. That's just my personal take. So if you believe in having exposure to the crypto space, I would say that those are probably going to be some of the better plays because BAT has been well overdue, I think, for a run-up personally. I think Hybrid Network has got a lot of room to grow if it becomes the base DeFi layer for liquidity, or the base layer of liquidity for DeFi. Will prices of homes and mortgage rates go down? David, yes. The home prices are more likely to go down more than mortgage rates from here on out because there's not much lower it can go. It's at 2%. Banks aren't going to lend it out. They're going to lend it out at 0% at the lowest, right? They can't take a loss like that. So, yeah, I think what the next thing is to look forward to is prices going down. I'm in the same boat. I want to look to get a property in the next year or so. So I'd be willing to buy it a little bit earlier on if I find a place I want to move to, and then also if prices come down. But we'll have to see. The Dow has dropped below 20,000. No way. Wow. Incredible stuff, guys. Yeah, so this is what I had drawn on my chart here for a plausible scenario here for the Dow Jones, taking into account the 2 resistance points, the support before we continue the rally, coming down here and just sitting on this area for 40% decline. That'd be interesting if we got that, because quite frankly, I don't think we've got only got 1 more month it would take in order to get there. If not, maybe on this month if things keep selling off the way they are. But I mean, wow, this is incredible, guys. Nearly 10,000 point drop here on the Dow Jones. Not exactly, but almost 10,000. 33% haircut in the Dow Jones. All right, 1 more question here. Let's see here. J-Dubs, we'll do 2 questions. And this one, Jabes, I don't think the Fed's been building positions in Bitcoin. It would be awesome to see it, but they have to be publicly transparent about that. If they were doing it, they'd be breaking their sense of transparency and the rules that they have. But I guess people would joke, when is the Fed ever transparent? Oh, yeah, we're confident to keep raising rates. Okay, we're going to drop down to 0 instantly. All right, let's see here. Let's get 1 more good question, guys, then we're going to sign up for the day. One more question. Frederick, the ultimate question. How long until the Fed goes negative? Well, it's until printing a bunch of money doesn't work anymore, right? That's the issue we're going to enter into in the next couple of months, and maybe just the next couple of weeks. The Fed has just injected $700 billion. It's already providing up to $1.5 trillion in repo market operations. It is the base lender in repo markets now, whereas it used to be commercial banks to commercial banks. But apparently the system is frozen. So in this case, I mean, the Fed can probably produce another round of QE, maybe 2 more rounds of $700 billion. And then when that's not enough to keep stocks up, it's not enough to keep the financial system going, I think they might toy around with negative rates. And that could be a matter of just about a month or two from now at the rate that they've been dropping. And that's probably a pretty conservative estimate. It could be even sooner. But, yeah, man, that's going to be a really interesting outcome. If that happens and we see negative yields on treasuries, I'm going to feel quite comfortable having my positions in Bitcoin and gold and silver, plain and simple. Anyways, guys, I hope you all are having a fantastic day wherever you are. If you joined this far into the live stream, drop a like. I really appreciate it. And again, always hit the bell icon and subscribe if you haven't already. I want to make sure you guys don't miss a video, especially during these troubling times. I want to be here with you during this journey. And I always appreciate your guys' support. Thank you guys for being there and continuing to support the channel and supporting me doing what I'm doing. It means the world. So thank you guys for joining as always. And I'll see you guys tomorrow for tomorrow's live stream. So have a great day, and thanks for staying tuned. I'll talk to you all soon.